Speaking of Asian markets, it is the moment of truth for China, it appears. Markets around the world bracing for a central bank move in the People's Republic. Sara Eisen is tracking all the developments there.
Mike, we're talking about China slamming the brakes on its red-hot economy. Could happen any day now, and that's the market's take, especially after that faster-than-expected inflation data that we got out of China this week. Head of China equity research for Nomura tells me it's very possible that China will lift interest rates next week. Now, there's two tightening moves that we have to talk about here. China has two options. Either it could let its currency, the yuan, appreciate against the dollar, something the U.S. has made it very clear that it wants, or it could raise interest rates, more traditional way, raising interest rates, tightening up monetary policy. Both have the same effect, basically, of sucking all that extra liquidity out of the system and cooling off the economy, which many say is overheating at this point.
They tend to do this after the markets close. They're closed, so this is driving markets today around the world.
It has been, and you just mentioned Chinese stocks. That is one market down today, most in a week on those tightening fears. They've come down more than 10% since August, Mike, and a lot of that is because they're pricing in this tightening move. Also, yuan forwards heading for the best week in 2 months here, expectations of a stronger Chinese currency. And finally, you have copper heading for a weekly loss. And we know copper has been driven by China's voracious appetite for that commodity. Slowdown in copper signaling perhaps a slowdown in Chinese economy. So some strong signals here. But as you said, the People's Bank of China is very unpredictable, and everybody knows that. But it certainly seems like the market is getting in position for a move here.
Well, right now they seem to be selling the rumor. Will they buy the fact? What's going to be the effect if we get some sort of announcement?
It's a good question. And if history is any guide, if China makes a move to tighten, that should bring risk off the table. In other words, stocks should sell off around the world. And that's what we saw when China moved to increase the reserve ratio for banks, when it told banks to set aside more money, less loans. So that could be the one option. Now, the other is that this is already baked into the cake. And that's what Keith McCullough, CEO of Hedgeye and also Bloomberg contributor, is saying. He, in fact, is advising to buy Chinese equities at this point on that inflation data. The ETF he chooses is CAF, and that's a bet, a long bet on Chinese equities. And the idea there is this has all been priced in.
All right. You'll keep an eye on this for us all weekend, I'm sure. 24 hours a day.
Yes.